So today we are moving to taxation of banks. We are moving to taxation of bank. So that is where we are moving to. So after taxation of bank, we are going to discuss some theoretical aspects in tax. So we want to look at how do we compute taxation for banks, for banking industry? How do we compute their tax? Basically, bank, they are subjected to tax in the same way or manner in which any other company is subjected to tax. However, there are some provisions, guidelines that must be followed before you can assess a profit of a bank to tax. There are some provision guidelines that must be followed before you can assess a profit of a bank, before that profit can be assessed to tax. So we need to look at those provisions and guidelines that need to follow before the profit of a bank will be assessed to tax. As we all know, apart from filing of return by end of the year, bank file return not later than 6 months after the end of the year, company income tax return. Apart from the return, banks are also required to file another return. That one is a monthly return, where they will be giving information about their customers, the tax identification number of the customer, the name of the customer that Transtart business with them, that open a corporate account with them. They need to be doing that. That must be submitted not later than 7 days after the end of the month. The name and address of the new customers and their tax identification number. Bank must submit that to the FRS. So that one too is a monthly return filed by bank. So apart from that, we are going to look at what are the income of a bank that we are going to see that are subjected to tax. Income of a bank that are subjected to tax. One of the income of a bank subjected to tax, as we all know, is the interest income. When a bank earns interest on a loan, that interest is subjected to tax. So bank pay tax on those interests earned by bank on a loan given. Aside that, one of the major revenue of a bank that will be subjected to tax is account and transaction fees. Account and transaction fees too is subjected to tax. When a bank receive account and transaction fees as an income, such income will be taxed appropriately. Advisory fees is one of the income of a bank too. Advisory fees is one of the income of a bank. Advisory fee is also subjected to tax. Aside that, we have another one called management fee. Management fees too is subjected to tax. Management fees is subjected to tax. Administrative fees is also subjected to tax. Administrative fees is also subjected to tax. Annual account maintenance fees. Annual account maintenance fees is also subjected to tax. Insurance commission. If a bank earns an insurance commission, is also subjected to tax. These are the income of a bank that are subjected to tax. Now, let's look at income of a bank that are exempted from bank. What are those income earned by bank? If a bank earn the income, they will not be subjected to tax. That means non-taxable income of a bank. What are the non-taxable income of a bank? Let's look at them one by one. Non-taxable income of a bank. Number one, I will start. Let me start from the last one. I will explain them. So, one of the income of a bank that are not subjected to tax is profit on disposal of fixed assets. Profit on what? On disposal of fixed assets. If a bank earn a profit from disposal of an asset, such profit is not subjected to tax. So bank profit is not subjected to profit on disposal of a fixed asset is not subjected to tax in the hand of a bank, because even the normal company too, the profit of on disposal of fixed assets are not subjected to tax, because they are subjected to company capital gain tax. They are not subjected to company income tax or personal income tax. Another one, dividends received by bank. If a bank receive dividend from having shares in another company, such dividends is going to be treated as frank investment income, and such dividend will not be liable to tax. So this dividend is also an income exempted from tax.
Hello, network.
We have another one. Another income of a bank that are not subjected to tax is called interest earned on foreign placement. Interest earned on foreign placement. Foreign placement means foreign investment. If a bank have a foreign investment and they receive interest on those foreign investments, provided that the proceeds of the foreign investment is brought to Nigeria through approved channel, such interest or income from their foreign investment will not be subjected to tax. So another one, interest received by bank on federal and state government development stock of federal and state government security. When a bank earn interest on a federal or state government security like development stock, bond, treasury bill, treasury certificate, all these will not be subjected to tax. They are exempted from tax. Another one, interest on a loan granted by bank to a company engaged in cottage industries. Interest on a loan granted by bank to a company engaged in cottage industry under Family Economic Advancement Program. These two will be exempted from tax, but this depends on this condition. Interest on a loan granted by bank to a company engaged in cottage industry is going to be exempted from tax if the moratorium period is not less than 12 months. If the moratorium period is not less than 12 months and the interest rate is not more than the base lending rate, this will be exempted from tax if the moratorium period is not less than 12 months and the interest rate is not more than the base lending rate. Interest on a loan granted by bank to a company engaged in cottage industries. Another one, Interest on a loan granted by bank to a company engaged in fabrication of local plant and machinery. Interest on a loan granted by bank to a company engaged in fabrication of what? Local plant and machinery. These two will be exempted from tax if the moratorium period is not less than 18 months and the interest rate is not more than the base lending rate. Interest on a loan granted by bank to a company engaged in fabrication of local plant and machinery shall be exempted from tax if the moratorium period is not less than 18 months and the interest rate is not more than the base lending rate. Another one, another one. Interest on a loan granted by bank for primary agricultural production. Interest on a loan granted by bank for primary agricultural production. This one too shall be exempted from tax if the moratorium period is not less than 12 months and the interest rate is not more than the base lending rate. Let me repeat again. Interest on a loan granted by bank for primary agricultural production. These two shall be exempted from tax if the moratorium period is not less than 12 months and the interest rate is not more than the base lending rate. Another one, which is the last non-taxable income of a bank. This one is interest on a loan granted by bank to a company engaged in manufacturing good for exports. Interest on a loan granted by bank to a company engaged in manufacturing good for export. This one shall be exempted from tax based on the following condition. This shall be exempted from tax based on what? Based on the following condition. What are the conditions that will make interest on a loan granted by bank to a company engaged in manufacturing goods for export be exempted from tax? Number one, the beneficiary company must export not less than 50% of the good of its manufactured good. They must export it out of the country. So the beneficiary company must export not less than 50% of its manufactured good out of the country. That one is certain. Another one, the beneficiary company must obtain certificate of exports from Nigeria Export Promotion Council. The beneficiary company must obtain certificate of export from Nigeria Export Promotion Council, certifying the export of the company. Another condition Another condition for manufacturing goods for export, the rate of exemption shall be stated below. According to this table, the rate of exemption, the rate of interest that will be exempted under manufacturing goods for export is stated as follows. They are stated as follows. If the loan is above 7 years and the moratorium period is not less than 2 years, the 70% of the interest of the loan will be exempted from tax. If the loan is between 5 to 7 years and the moratorium period is not less than 18 months, 40% of the loan will be exempted from tax. If the loan is between 2 to 4 years and the moratorium period is not less than 12 months, 10% of the loan will be exempted from tax. But any loan below 2 years, no moratorium period, there will not be any rate that will be exempted from tax. That means all the loan will be subjected to tax. So these are all the income of a bank that are exempted from tax. Another area we need to look at in this bank, let's look at some expenses incurred by bank that are treated as disallowable expenses. If bank in the bank account, depreciation, if it's stated in the bank account, depreciation is disallowable expenses. We all know that. Loss of sold and fixed asset is disallowable expenses. But there are some other expenses too. These expenses is peculiar to bank only. If a bank incur them too, they are treated as a disallowable expenses. One of them is increase in provision on performing loan accounts. If a bank make provision on performing loan account, such provision will not be allowed as an expenses. It will be treated as a disallowable expenses. Increase in provision on performing loan account is going to be treated as disallowable expenses. Increase in provision on other assets or account receivable. Increase in provision on other assets or account receivable too is going to be treated as disallowable expenses. Increase in provision on advances under finance lease. Increase in provision on advances under finance lease too will be treated as disallowable expenses. Increase in provision for gratuity. Increase in provision for gratuity too is going to be treated as disallowable expenses. Increase in provision for off-balance sheet engagement. Increase in provision for off-balance sheet engagement too will be treated as disallowable expenses. Unrealized exchange loss. Unrealized exchange loss too is going to be treated as disallowable expenses. All these are the disallowable expenses of a bank. So let's look at a question relating to bank, taxation of banks. Let's look at a question relating to taxation of banks.
Sorry, I want to ask a question concerning the exemptions.
Yes.
Normally provision is disallowable expenses. Is it the increase that are disallowable or the provision? Before there is an increase, there's already a
The
provision.
provision
I
is the
don't.
provision, the provision that is disallowed. But the way they state it, they write it as increase according to the law, but they mean that provision. However, in bank, provision for non-performing loan is not disallowable expenses, so it's allowable. It's only provision on performing loan that is disallowed. Do you understand?
Yes, sir.
It's only provision on performing loan that is disallowed. Provision on non-performing loan is allowed. Let's look at a question. Question 3. Question 3. Somebody should help us read the question 3.
Okay, sir.
Okay, go ahead.
The interest on loan relating to primary agricultural production included in the income of ABC Bank Limited for the year ended December 31st, 2021 amounted to 5 million. The breakdown of the interest income based on the loan terms are as follows: repayments, moratorium, interest rates, agric loan. Interest rate, okay. So we have 5 years, moratorium 24 months, interest rate 15%, the agricultural loan interest 2.5, 3 years, 6 months, 20% at 800,000, 2 year, 18 months, 14%, 700,000, 5 years, 6 months, 35%, 1 million. Then we have 5 million. Base lending rate in respect of the facility is 21% per annum. Required, compute the loan interest exempted from tax.
This loan interest is given to what type of company? What type of company this loan interest is given to?
Bank.
Is given to agricultural company.
Okay.
Abi,
Yes, sir.
this is given to agricultural company. It is stated clearly. Now, what is the guideline if a bank gives a loan to agricultural company? What are the conditions that will make the loan not to be subjected to tax? I will take you back to the note I just explained. Somebody should read this. This one that I highlighted, you can read it out.
Interest on loan granted by bank.
Go ahead.
Interest on loan granted by bank for primary agricultural production shall be exempted from tax if at least 12 months moratorium is allowed and the rate of interest is not more than the base lending rate of the bank at the time the loan was granted.
That
Refinanced
means any loan that bank give agri company The moratorium period must not less than how many months? 12 months. And the interest rate the bank charge must not more than the base lending rate at the time the loan was granted. Now, going back to this question now, the first loan this ABC Bank give agricultural production company, the loan is 5 years. The moratorium period is what? How many months?
24.
24 months. Why the interest rate is how many percent? 15%. The interest on the loan is 2.5. The question is this one going to be exempted from tax or subjected to tax? Is it going to be exempted from tax or subjected to tax?
It's more than, yeah, I think.
They said the
Exempted.
moratorium period must not less than 12 months. This one is more than 12 months. That means based on moratorium period, it passed the condition of moratorium period. Abi?
Yes.
Second condition, it must pass the two conditions. Second condition, the interest rate must not more than the base lending rate. In this question, what is the base lending rate?
21%.
21%.
Yes, sir.
This one, this first loan, what is the interest rate?
15%.
Is it more than the base lending rate? Is it more than the base lending rate?
No.
Or less than the... So based on this, are we going to exempt it from tax or subject it to tax?
Exempt.
We are going to exempt it from tax. Why are we going to exempt it from tax? Is because based on the moratorium period, it passed the condition. It passed the condition of the moratorium period. It passed the condition of what? The moratorium period. Because the interest rate, the moratorium period is not less than 12 months. It's 24 months. And based on the interest rate, it passed the condition of the interest rate. It passed the condition of what? The interest rate. Its own interest rate is not more than the base lending rate, which is good. The law says the interest rate given must not less than the base lending rate, which is okay. That means this interest of 2.5 is going to be what? Is going to be exempted from tax. If you look at the solution, this one, the name of the company, ABC Bank Limited, computation of interest exempted. For which of the year of assessment? For 2022 years of assessment. The repayment period of the loan is 5 years. The moratorium period, 24 months. The interest rate, 15%. The interest amount, 2.5. Is he exempted or subjected? I put it under exempted. Because these two conditions, it passed the two conditions. It's not less than 12 months. The interest rate is no more than base lending rates. So that is the reason why I put this one under this 2.5, why I put it under interest exempted. The second one, look at it. The repayment period is 3 years. The moratorium period is 6 months. The interest rate is 20%. The interest amount, 800,000. Is he exempted or subjected?
Subjected.
Why is he subjected?
Because the moratorium is less than 12 months and the interest rate is more than the lending rate.
The
Okay,
interest rate is not more than the...
It's not more than. Sorry.
Out of the two conditions, how many conditions he pass? Does he pass
One.
the two conditions? He pass one, he
Only
fail
one.
one. So it will not be exempted. He must pass the two. He must pass the two. So this one will not be exempted. So if you check the solution, this one will not be exempted. If you check the solution, 3 years, 6 months, 20%. Amount, 800,000. Under the exempted, 0. Are we making sense?
Yes, sir.
The third loan, 2 years, 18 months, 14%. Interest amount, 700,000. Is he exempted or subjected?
Exempted.
Exempted.
Why is he exempted?
Because the
moratorium is not less than 12 months. Then
Yes.
interest rate is not more than base lending rates.
Okay. So it is exempted. If you look at the solution, 2 years, 18 months, 14%, 700,000. Under exempted, 700,000. The last one, 5 years, 6 months, 35%, 1 million. Is he exempted or subjected?
Subjected.
Why is he subjected?
Moratorium is less than 12 months, while interest rate is more than lending rates. So the two did not pass the condition.
So 5 years, 6 months, 35%, interest amount 1 million, subjected. That means out of the interest on loan of 5 million, how much will be exempted? How much will be exempted out of 5 million? How much will be exempted? How much will, out of total interest on loan of 5 million, how much will be exempted?
nothing.
2.5 and 700,000. That's
When you add it together,
3.2.
3.2. That means this interest on loan of 5 million that bank give to agricultural company, 3.2 will be exempted from tax. Why? 1.8 will be what? The balance of 1.8 is going to be what? is going to be subjected to tax. Abi?
There's going to be taxable.
Yeah. Let's look at one more. Let's look at another question. Oh yeah, Prosperity Bank. Prosperity Bank PLC have been in banking business for several years. The interest on agreed loan included in the account of the bank for the year ended 31st December 2022 amounted to 18.2 million. The breakdown of the interest income based on the terms of the loan is stated below. Repayment period, moratorium period, interest rates, loan interest. 7 years, 36 months, 14%, 7.2. 5 years, 18 months, 18%, 5.6. 4 years, 24 months, 12%, 2.4. 2 years, 3 months, 10%, 3 million. The base lending rate at the time the loan was granted was 15%. Require A, state condition under which the following interest may be exempted from tax. Number 1, Roman figure 1, interest on loan for agreed trade or agreed business. What are the conditions where interest on loan for agreed business will be exempted from tax? What are the two conditions?
Moratorium must not be less than 12 months.
Yes.
Then interest rates must not be more than the lending rates.
The base lending rates. Interest rate must not be more than the base lending rate at the time the loan was granted. Roman figure 2. What are the conditions on loan for manufacturing good for export? What condition that will make loan for manufacturing good for export be exempted from tax? What condition that will make loan for manufacturing good for export be exempted from tax? Why B part of the question said compute the interest exempted from tax in the case of Prosperity Bank PLC.
I think the big part is like 50% of the goods must be exported.
Okay,
and they should not
let's
be
go to the
re-exported.
solution. Let's go to solution. Question 1, question A, Roman figure 1. Condition under which agreed trade interest on loan may be exempted from tax. Number 1, that interest on loan granted by bank for primary agricultural production shall be exempted from tax if the moratorium period is not less than what? 12 months. If at least 12-month moratorium period is allowed. Number 2, the interest rate is not more than the base lending rate at the time the loan was granted. That is on Roman figure 1. Roman figure A, question A, Roman figure 1. Question A, Roman figure 2. This one is talking on manufacturing goods for export. What is the condition that will make the interest on loan given to companies that manufacture goods for export be exempted from tax? Number 1, the manufacturing good for export must not less than the beneficiary company must export. The beneficiary company must export not less than 50% of its good manufacture. Why number 2 condition? The beneficiary company must obtain certificate of export from where? Issued by Nigeria Export Processing Zone. Nigeria Export Promotion Council. Let me repeat it again. The beneficiary company must obtain certificate of export issued by Nigeria Export Promotion Council, certifying the export of the company. Another condition. The rate of exemption shall be stated as follows. If the loan is above 7 years, the moratorium period must not less than 2 years. 70% of the interest of the loan will be exempted from tax. 5 to 7 years, the moratorium period must not less than 18 months. 40% of the interest of the loan will be exempted from tax. 2 to 4 years, the moratorium period must not less than 12 months. 10% of the interest on the loan will be exempted from tax. But anyone below 2 years, no moratorium period, no exemption. Now, question B, part of this question. B said we should compute the interest exempted from tax in the case of Prosperity Bank. Based on this table, look at the first interest. This interest, Prosperity Bank give this loan to which type of business again? They give it for agricultural company. This loan is given to agricultural company. So the first one, the repayment period, 7 years. The moratorium period, 36 months. The interest rate, 14%. The interest amount, 7.2. Is he exempted from tax or subjected to tax?
Exempted.
Why is he exempted from tax?
The moratorium period is not less than 12 months, while the interest rate also is not more than base lending rates.
You are right. It is exempted from tax. If you see my table, 7 years, 36 months, 14%. Interest amount, 7.2. Exempted from tax, 7.2. The second one,
Subjected.
5 years, 18 months, 18%, 5.6. Is it subjected or exempted?
Subjected.
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 It is subjected. The third one, Unko,
Exempted.
why the fourth one?
Exempted.
Subjected.
The fourth one, subjected or exempted?
Exempted.
Subjected. Subjected.
Eh?
Subjected.
Subjected.
Why is it subjected?
Moratorium period is less than 12 months. Moratorium
Okay.
period is less than 12 months.
It
Then
is subjected.
interest rate actually is yes,
Based on
subjected.
the reason why it's subjected is because of what?
Moratorium.
Because of the moratorium period.
The
It is less than
moratorium period
12 months.
12 months.
So out of interest on a loan of 18.2 million, 9.6 million is exempted. Out of interest on a loan of 18.2 million, 9.6 is exempted. Let's look at another question. Let's look at another question on bank. This one is talking of how we compute adjusted profit for a bank. Let's look at that question. Question 10. Question 10. Question 10. Question 10 is called New Era Bank PLC. Somebody should help us read it.
New Era Bank PLC has been in business for many years. Its profit or loss account for the year ended 31st December 2020 is as follows. The income. We have interest on agricultural loans 24 million, interest on export loans 12 million, interest on overdraft advances and other loans 286,500,000, foreign exchange income 99 million, lease finance income 21 million, fee and commission 139,500,000, profit on sale of fixed assets 450,000. The total of 585, 450 for income. Now the expenses. Interest expense 185,500,000. Depreciation 20,400,000. Loans and advances written off 36 million. General provision for loan losses 12,300,000. Specific provision for loan losses 10,500,000. General and administrative expenses 225,900,000. So the total of 492,600,000, and we have a net profit of 92,850,000. Additional information: the general and administrative expenses include the following: salaries and wages 138 million, director's remuneration 13,800,000, penalties for contravention of banking regulation 1,500,000, audit fees 3.6 million, office rent, rates and electricity 21 million, stationery, postage and telephone 10,500,000. Repair and maintenance, legal expenses, 16,800,000. Loan recovery, 2.7. Fines for late filing of tax return, 600. Acquisition of landed property, 900 million. Stamp duty on increase in share capital, 150 million. Luncheon voucher, 9.750 million. National Library, 300. Apapa Social Club, 180,000. Sponsorship of Calabar Carnival, 8,000. University of Benin Teaching Hospital, 120,000. Total of 6.6 million. Capital allowances and balancing chart for the year ended 31 December 2020 amounted to 98 million and 2.4 million respectively. All loans granted by the bank for agricultural trade or business had no moratorium or grace period. Schedule of interest on loans for manufactured goods for export are repayment period, grace amount, okay, repayment period including moratorium above 7 years, grace period not less than 2 years, amount of interest 6,700, 5 to 7 years not less than 1.5 years, 1.5 million, 2 to 4 years, 1 year, 1.350 million, below 2 years nil and 2.450 million, total of 12 million. Required: compute the tax liability of the bank for the relevant year of assessment, 15 marks. Then B part of the question.
Oh yeah,
Explain the B part of the question. Explain the capital allowance treatment in the provision of Finance Act as it relates to small medium company. 5 marks.
Thank you very much. So we are asked to compute the tax liability of the bank for the relevant year of assessment. In this question, what is the year ended? The year ended of this question. 2020 is the year ended. That means the year of assessment will be what? 2020 what?
2021.
2021.
21.
So we start from net profits. If you want to compute the tax liability, we start from net profit. Where is the net profit? How much is the net profit? 92,850. That is the net profit. Net profit is 92,850. Can we see that?
Yes.
Add disallowable expenses. We add back disallowable expenses. In the question, what are the disallowable expenses? Starting from under the expenses before they get the net profit. Look at those expenses. Which one do you think is disallowed among them?
Depreciation is allowed.
Yes. Loan and advices written off, is it allowed or disallowed?
Allowed.
It is allowed. General provision for loan losses,
Disallowed.
allowed or disallowed?
Disallowed.
Disallowed. Specific provision for loan losses, allowed or disallowed?
Allowed.
Allowed. That means depreciation is disallowed. Depreciation is disallowed. Depreciation is what? Is disallowed. And general provision for loan losses too is disallowed.
I think there's additional
yes, we are
information.
still going to look at that. So depreciation, 2,400. General provision for loan losses, 12,300. Under the general and admin expenses, we have the breakdown. These general and admin expenses of 225,900, we are giving the breakdown. one of the breakdown of general and admin expenses. The breakdown. Number one is what? Number one is what?
Wages
Salaries
and
and wages
Salaries and wages. Allow or disallow?
is allowed.
Eh?
allow.
Allowed.
Director
Allow.
remuneration.
Allowed.
Allow. Penalty for contravention of banking regulation.
Disallowed.
Anything fines and penalties. Anything fines and penalties is disallowed. Fines and penalties is disallowed. Disallowed. The next one, audit fee. Allow or disallow?
Allowed.
Allowed.
Office rent and rates and electricity. Allow or disallow?
Allow.
Allowed.
Allow. Stationery and telephone.
Allowed.
Repair and
Allowed.
maintenance.
Allowed.
Allow. They are all allowed. They are for business.
Oh.
Under the legal expenses, one of the legal expenses we have is called loan recovery. We incur legal expenses to recover our loan. Is it allowed or disallowed?
Allowed.
It is allowed because when you recover your loan, more income will come into the company, more revenue is allowed. Another legal expenses we incur is acquisition of landed properties. Acquisition of landed property. Allow or disallow?
It is allowed.
Disallowed. It is disallowed.
Why?
Because it's an asset and it's not.
It's an asset. It's capital in nature.
Yes.
Stamp duties on increase in share capital. Allow or disallow?
It's capital in nature too.
Yes, it's capital in nature. Share capital is capital. It's not allowed. Launch voucher. Luncheon voucher. Allow or disallow? Your staff, you are giving them lunch in the office.
It's allowed.
It's allowed. It's part of staff welfare. Do you understand?
Mhm.
Yeah.
Donation. You donate to National Library.
It's
You
allowed.
donate to National Library. Is it allowed?
It's allowed.
Allowed.
Allowed. Second one,
Disallowed. Apapa.
Apapa Social Club
It's allowed.
is what?
Disallowed. Disallowed.
Disallow.
You sponsor Calabar Carnival.
It's allowed.
Disallow.
Michel, don't have ancient time, you understand you.
Another one, you donate to University of Benin Teaching Hospitals.
Allowed.
Allow.
It is allowed. So these are the disallowable expenses we have. penalties, acquisition, stamp duties, Apapa Social Club, sponsorship of Calabar Carnival. So you can see them. Penalties, 1.5. Fines for late filing of return. Acquisition, 900. Stamp duty, 150. Apapa Social Club, 180. Sponsorship of Calabar Carnival, 6,000. This fine too. Fine for late filing of return is disallowed. Is disallowed.
I wanted to say it.
So you add all your disallowable expenses. All your disallowable expenses, if you add them together, is 42,020. Now, let's go to the income. There may be some income that is not subjected to tax. Let's go to the income. Look at the income side. Interest on a Greek loan, is it subjected to tax or not subjected to tax?
Depends
It
on the
depends on the
moratorium.
information given to us.
Yes.
Are we giving additional information on interest?
Yes.
What is the information?
Okay, they had no moratorium period or grace
Let me read
period.
it out.
All loans granted to the bank, all loans granted by the bank for agricultural trade or business had no moratorium or grace period.
So that means, is it going to be subjected to tax or exempted from tax? Is it
I
going to be
think it
subjected
should
to
be
tax?
exempted. It
Not
should be exempted.
It will be
Subjected.
subjected. They say it has no
Subjected.
moratorium period. And
No
they just say
moratorium.
his moratorium
Subjected.
period must not less than how many months?
12 months.
12 months. This one even has zero moratorium. It
12
doesn't have any
months.
moratorium. That means it will be what?
Subjected to tax.
To be subjected to tax. Interest on export loan, 12 million naira. Is it subjected to tax or exempted?
Let's check the information.
We are giving a table. We are giving the breakdown of the 12 million naira. Where is the breakdown? They said schedule of interest on loan for manufacturing goods for export. Abi, is as follows. That 12 million, we are giving the breakdown. Can we see the breakdown? If a loan is above 7 years and the moratorium period is not less than 2 years, the interest is 6.7 million. How many percent will be exempted from tax? How many percent will be exempted from tax?
70%.
In the table I gave you in the question, when I'm explaining, how many percent? 70%. 70% will be exempted from tax. %70. 70% of 6.7. It will give us 4,690,000. The second one, 5 to 7 years. Moratorium period not less than 18 months. The interest amount is 1.5. How many percent will be exempted from tax?
40.
40%. 40% of 1.5, 600. The third one, 2 to 4 years. 12 months, 1.350.
10%.
10%. At the end of the day, the total interest on the export loan that will be exempted from tax is 5,425. 5,425. If you check non-taxable income, interest on export loan, 5,425. Let's go to the question again. Under the income, interest on overdraft and other loan, is it exempted from tax or subjected? It is subjected to tax. Foreign exchange income, it is subjected to tax. Lease finance income, it is subjected to tax. Fee and commission, it is subjected to tax. What about profit on sale of fixed assets?
The capital gain tax is exempted.
Exempted.
So, under your non-taxable income, profit on sale of fixed assets, exempted. You know, if you want to compute adjusted profit, you add disallowable expenses and you less what?
Non-taxable income.
Non-taxable income. At the end of the day, your adjusted profit is 129,000,005. Your adjusted profit is 129,000,005. Your adjusted profit is 129,000,005. From your adjusted profit, you add balancing charge. You add what? In the question, we are giving balancing charge. You add it. Once you add balancing charge, you get accessible profit. You now less capital allowance. How much is the capital allowance given to us in the question? How much is the capital allowance?
98 million.
98 million. After you add balancing charge, the accessible profit available is 131,405. This 131,405, you want to deduct capital allowance of 98 million from it. You want to deduct capital allowance of 98 million from 131,405. Don't you think the capital allowance is too much? The capital allowance is too much. If you have too much of capital allowance and the profit is not high, what do you do?
Plus 66 to third.
You
You
will reduce it
restrict
to
it
third.
to third. 2/3 of the accessible profit. 2/3 of 131,405. So 2/3, 66 2/3 of 131,405. It will give you 87,603. 87 million what? 603. That means the balance is going to be 10,000.
So sorry, so the capital allowance limit is on banks, but not for cargo and airline.
This
The
one apply to it does not
limit.
apply to manufacturing company or agricultural company. It apply to only service companies like bank. They are the one that can restrict their capital allowance. But if it is manufacturing company, you claim all the 98 million. You will not restrict. If assuming this company they are producing good, you claim all the 98 million. You will not restrict any. Do you understand? All the 98 million, you claim it if it is manufacturing company or agricultural company. Assuming we are computing tax for agricultural company or manufacturing company, you claim all the capital allowance. You will not restrict it. But bank is a trading company, it's a service company. Bank is not producing anything. You have to restrict your capital allowance when you have too much of capital allowance. So 2/3 of 131,405, it give you 87,603. That means the capital allowance you are going to minus from the profit will be 87,603 instead of 98. The capital allowance you are going to relieve 87,603 instead of 98.
So is it not supposed to be 2/3 of 98 million?
No, 2/3 of the profit. 2/3 of the accessible profit. Now, the balance of the capital allowance is going to be carried forward. Your total profit is now going to be 43,802. The balance of the capital allowance is 10,397. You are going to carry it forward for the next year of assessment. Why the total profit is what? 43,802. $43,802. You cannot compute tax liability. Company income tax, CIT, since their turnover is more than 100 million, is going to be 30% of the total profit or taxable profit. 30% of 43,802 is going to give you 131. Is going to give you 13,141. Education tax, as at 2021 year of assessment, education tax is 2%. 2% of adjusted profit, 2% of 129,005 is going to give you 2,580. Aside that, since it's a bank, they will pay another tax called NICDA levy. Since it's a bank, they will pay another type of tax called NICDA levy. That one is 1% of profit before tax. What is the net profit in this question? 92,850. 1% of 92,850.
I think it's 1% of adjusted profit. Is it 1% of net profit?
1% of net profit. Do we have any question regarding this? Do we have question? So in the absence of no question, you can call it a day. Thank you.
Hello, sir.
Yes, I can hear you.
Yes, sir. Please, the specialized business, the what's called the notebook for last Sunday. You've not helped us to drop it, sir.
I've not dropped it.
Yes, sir.
Yes, I said the same thing.
You did not say the same thing. No. Nobody said the same thing. What I'm just saying
I
in the
said
group
it
chat
this
is
morning that
some
nothing
people
was sent
dragging
on
me.
the platform.
You always come late. You always do this. That is what I'm
No.
saying.
When we started the class, I said I didn't see anything on the platform.
So, because I was surprised. That is what I'm
No, I
saying
said
now.
I didn't attend
to
the
the class
last week.
early, sir.
Okay.
You came late to
So,
the class, sir.
okay, I came late to the class. Okay.
Yes.
Oh, no problem. Thank you. I will
Don't
not
worry.
come late.
Don't worry, sir. You are delivering well. Don't worry. We're
Okay.
almost there.
Thank you very much. Thank you for your commendation, sir. Because, sometimes all this kind of message normally demotivate lecturers. We are human beings, honestly. I lecture in the morning yesterday. I lecture public sector accounting. Immediately I finish the lecture, I have to go to our center in Isolo. I lecture 3 courses for the physical student.
Sir, I think what we Sorry, so sorry, sir. That's not I think the only thing we need is just communication. Even if you are to tell us we are starting 9, we
Okay.
are okay. But if there is no information, nothing, we will talk.
Oh, no, it's good to
Because
talk. I understand. It's your
Uh-huh.
right.
So you just
You're
need
right.
give us your word. We are starting 9, we are
Yes.
starting 8:30. Yes, we are okay.
This morning,
I'm so
the
sorry
lecture,
if I've
the
said
lecture
anything wrong.
invitation, okay, you did not do anything wrong. I'm not blaming you. Hmm? The lecture
All right,
invitation
sir.
was sent late, and I won't lie to you. I wake up very late this morning. I was tired. I got home around after 10 yesterday because of traffic. You understand? And I have to do some other thing. That was the reason. So I'm sorry. Next time we are going to, I will communicate. This is when we are starting, and I will be punctual. It's your right. You understand? But
All right, sir. Thank you,
no
sir.
problem, no problem. Thank you very much. So I will send the lecture material
Take
now.
care of yourself, sir.
Yes, thank you. Yeah.
Yes, sir. Okay, thank you, sir. And that of last week, oh.
Yes, I will send it together. You'll see it. Okay, thank you very
Thank you,
much.
sir. Yes.